Welcome to Elton's retirement journey. Thanks everyone who was listening to the video on the NACA homebuyers program. That's a great program for anyone who's thinking about purchasing a home to get into. If you go and talk with your mortgage lender, go to your bank and you come out a little with your head down because they want the 20% down and a whole bunch of other stuff. The interest rate's kind of high for you. That would be a good option for you to go to the NACA program. Eliminate the PMI, have the option of paying down your interest rate, and just get yourself ready. So I hope you enjoyed that. I wanted to get out something that's going to really help people. And today we're going to talk about a good place to park your money. In my case, I wanted to have a couple places where I can set up different accounts for different needs that paid good money. So I was up one night and I was doing Google, came back with a couple banks, Ally Bank, Marcus, and then I found this VO Bank. And back then it was about a 1.2 or one and a quarter. So I had most of my money over at the credit union in a money market as well as a CD. And the CD was like 0.25. In the money market, it was less than that. It was like 0.15. I parked the money there because I had vacations that had got canceled. That money came back to me and I wanted to put it someplace. And I went and got a CD so I wouldn't spend it. I was trying to discipline myself. But anyway, once I found out about the VO Bank that we're taking a look at right now, I decided to open up some accounts. So let's just jump right in there. Well, I'm going to go straight to the savings account. And this is what they're paying on their savings. I'm going to scroll way up high so you can see it. They're giving you 1.10. Now, this is an online bank out of Oklahoma City, I believe. And the Midwest Bank is what they're called. And they've got all these different features. It's basically it's FDIC insured, and it gives you some flexibility. Now, if we go over and take a look at the money markets, I'm gonna bring you right up. This is what you would get as a Feds. They didn't raise the interest rate; they're gonna stay the same for quite a while. This is what you're getting right now on a money market. Now, if anyone ever knows anything or ever had a money market, it's limited on the number of withdrawals you can take out of the account per month. But if we scroll up and look at some of the benefits, flexibility to grow, convenience of opening an account online, we regularly monitor the competition. I can testify to that because once I open up my account, which I opened this account up, I think in 2022, they started adjusting the rates up. So if it was 1.25 when I started, by the time I got the next month, there was a rate increase. It would go to 1.75, and it went all the way up to 5.0. I think my highest is 5.12. Now, this other rate that I'm talking about here is what you would get if you open an account. But I'm over 5 on everything. And the interest is compounded daily, growing by your money fast. And again, FDIC insured. And it starts talking about, you can go here and take a look. It's VO Bank, VIO Bank, online bank. And let's take a look at the CDs here. Take a look at the online CD, and these are bank CDs. So these aren't the same as the broker CDs that might be callable. The callable CDs, if that interest rate of 5.25, and you had a CD through one of the brokeragers, and it's callable, and that dropped to 2.25, they may decide, hey, look, I'd rather not pay you the rest of this interest, so I'm gonna call the CD in. I'm gonna give you your principal back and whatever your interest. And nice having you here. See you later, because they would save money. Nobody wants to pay out that when the interest rates are low. But see, they're locked in right now. They're going to be like that for a while. But look at what you're getting on a 6 month, a 12 month. If you're a little skittish and you're worried, you can lock it in at 5 here, and that's over the yield, and that's with the money compounding in the account which they pay out. Now, when you look at the 6 month, there's a caveat to it, and what we're going to do is we're going to use a $1,000 example. So I'm going to throw $1,000, and you can throw it into your calculator too, plus 5.25, and you hit the percentage symbol, and then you hit the equal. So the interest you're going to get on that Annual percentage yield is 52.5. Now that's over 1 year. So what you do is you divide that by two. So that should come out to 26.25 is what you would get in that first 6 months over the with that amount of money in there. And you would get like if it's, let's take the 26. Let's just do the math here. What you would see is if it's 26 and a 2650 divided by 6. Yeah, let me see. My math is messing up here. $26 divided by 6. And what they would be doing is throwing you like something like a few bucks in there every month to get up to that $25. That's with 1,000. But if you multiply it, you go up to 10, 20, 30, then the bucks start coming in. But then whatever you calculate, divided by two. So these are the CDs here. Now with this money market account that I have, I'm currently shipping off 500 a month to it. Originally, I was invested in a Roth with technology and another, I think it was a growth fund. And the funds I picked were very low in price, but they were comparable to some of the big boys, the mix that they had. So I had to pick my own. But anyway, I was sending money in. I did it for 2 years. And then I watched in 2022, I watched the bottom fall out of it. The entire account in the Roth that I was sending this 500 into, it dropped by 31%. It's up now, so it recovered to 31%, and then it's grown by about 18, something like that. So, if it's 30, that's all 48, 50% gain. I couldn't stomach that type of loss. So I went with the guarantee 5.30, and I'm in my second year of sending 500 bucks in here a month into my fund to pay off my mortgage. So I wanted to bring this to your attention. I'm not a paid sponsor. This is just a testimony of a customer. I like this, having this ability to go in and create these multiple accounts. You got my long term, I've got the short term, and I even got one for my insurance. So I like to pay my insurance up every 6 months. And I started in September of last year, and I was shipping off about $105, and that was to pay my insurance. And I'm doing it again. So the first 6 months of sending that money in, by the time the insurance was due, I had earned $5 in interest. And that's only because it was such a small amount. But when you get into the bigger amounts, the bucks start rolling in. Now, one thing about these interest bearing accounts, when it comes to doing your taxes, and what I like about these guys here, if I'm preparing my taxes, I could throw a spreadsheet together and I can go in and look at each account. And in January of 2025, it's going to tell me what the interest was on each account for the entire year. So I don't have to wait on the 1099s. It's 1099-INT, I think it's what it's called. And for those of you who don't know, any interest at $10 or more, you have to claim it on your taxes. Anything below $10, you don't have to worry about. But I thought I'd bring this to your attention, as some of us are looking for ways to park our money. We've got things we want to do, and this is a good way for you to save some money up. If you go to transfer the funds from your bank, it may have a transaction fee. If you link your bank accounts with VO Bank, you will do an external transfer. It takes about 3 days to post when it goes that way. If you transfer it in from your bank, it'll post right away. In that case, you save a little bit of money on the transfer fee, but the compounding, you might lose 2 or 3 days on that, but it doesn't matter. I mean, the rates are so great. They also very secure. If you screw up your password 2 or 3 times, it's going to lock you out. So I've been happy with that. I've locked myself out a couple times, so that's a good thing. And they have good customer support when you call in to get your questions answered. Like, hey, I'm putting 10 grand in this 6 month CD. It says 5.25, how much I'm going to get. And they will explain to you that's an annual percentage yield. You calculate that, divided by two. That's what we're going to pay you for that 6 month. At the end of that 6 month CD, they're going to add it every month. And they're going to put that money in there, and then it will help you compound and gain and grow. So this is a good option for you. If you think you might want to try it, go ahead. And that's about it. If you like this information, give me a like, leave me a comment, and subscribe. I got a couple other ones. We're going to start moving into vacation while we're working. Those of us who are still in the workforce now, even though this is Elton's retirement journey, I'm still working. So I'm going to take my vacations. And that's what we're going to start talking about the next session. And some of the travel agencies I use that get me all over the world, and the caveats and my experience with them. Okay, so stay tuned. Again, this is Elton Retirement Journey.